Imagine someone offers you free money. Every 3 months, cash appears in your bank account. You did nothing. You worked nothing. The money just arrives. Sounds too good to be true, right? That is how most people think about dividends. They see it as free money, a gift from the company to the shareholder. But dividends are not free money. They are not a gift. Today, I will explain what dividends really are. You might be surprised, and you might change how you think about your investments. Let us start with the basics. A dividend is a payment from a company to its shareholders. When a company makes a profit, it can do 2 things with that money: reinvest it back into the business, or give some of it to shareholders. That second option is a dividend. If you own a stock that pays a dividend, you receive cash. Usually every 3 months, sometimes every month. Sounds good so far. But here is what most people do not understand. The truth about dividends, 130. When a company pays a dividend, the stock price drops by the exact amount of the dividend. Let me repeat that. The stock price drops by exactly the same amount as the dividend. Here is an example. You own a stock worth $100. The company pays a $2 dividend. The day the dividend is paid, the stock opens at $98, not $100. You receive $2 in cash, but your stock is now worth $2 less. You have exactly the same total value. Nothing changed. The dividend did not create new money. It just moved money from the company to your pocket. Of course, over time, the stock price can go back up if the company continues to do well. But the dividend itself is not new wealth. It is a transfer. So why do companies pay dividends at all? 2 main reasons. First, some companies cannot grow forever. A mature company like Coca-Cola or Procter & Gamble. They already sell to everyone on the planet. There is not much room to grow. Instead of keeping cash they cannot use, they give it back to shareholders. That is a good thing. Second, dividends attract a certain type of investor: pension funds, retirees, people who need regular cash flow. A company that pays reliable dividends for 50 years sends a message: we are stable. We are trustworthy. We will not disappear tomorrow. That is valuable for many investors. Here is the big mistake most beginners make. They focus on dividend yield instead of total return. Dividend yield is the annual dividend divided by the stock price. 5%, 4%, 3%. They see a stock with a high dividend yield and think it is a great investment. But a high dividend yield can be a trap. Sometimes the stock price drops a lot. The dividend stays the same. The yield looks high: 7%, 8%, 9%. But the stock price dropped for a reason. Maybe the company is in trouble. Maybe the dividend will be cut next year. If you buy for the high yield, you might lose your principal, and the dividend might disappear. The best companies do not always have the highest yields. They have the most reliable yields. So what is better, a stock that pays dividends or a stock that reinvests everything? There is no single answer. It depends on your situation. If you are young and working, you probably do not need cash flow today. You want growth. You want the company to reinvest its profits, to grow bigger. So your stock price goes up. If you are retired, you might want dividends. You need cash to live on, and you do not want to sell your stocks every month. But here is a secret. Many smart investors prefer companies that do not pay dividends, because those companies reinvest their profits and grow faster. And when you need cash, you can just sell a few shares. That gives you more control over when and how much you take. Let us recap. Dividends are not free money. They are a transfer of value from the company to you. The stock price drops by the amount of the dividend on the payment day. A high dividend yield can be a trap. Never buy a stock for yield alone. If you are young, focus on growth. The dividend can wait. In the next video, we will look at how to open a brokerage account, step by step. No confusion. For now, remember this. Dividends are real money, but they are not free. They come from somewhere. That is all for today.